Hi, I'm James Dunn. Welcome to the Inside Network. Welcome to INDepth, and my guest is Warren Gibson, Head of Marketing at fractional investment platform DomaCom. Welcome, Warren.
Thank you, James. Pleasure to be here.
Take us through the business proposition of DomaCom and fractional investment as a concept.
Fractional investment, another word for fractional investment is syndication. So basically we provide a syndication platform that enables people to acquire an interest in an asset, a high value asset like a property, without having to buy the whole property. And that's the problem with property, is it's an all or nothing proposition. You either buy it all or you don't buy any. The only other options for buying property really are A-REITs and unlisted property trusts and the like, which are pooled structures. So in our structure, people can join with family and friends. They may be completely unrelated. We operate mainly through financial advisors, so they bring their clients to the table, and they open the accounts on the platform as they would any other platform. People deposit the funds they want to invest, and then they set about finding an asset. They will either find the asset themselves, or they will engage a property buyer to find a suitable asset that will deliver the requirements of the investors.
So it's like BHP will divide its equity capital into billions of shares. That's exactly what you're doing with...
Yeah, it's a unitised structure. It does have several, I guess, reliefs from ASIC as to how it operates. We don't have a pooled structure, so each property that we acquire on behalf of the investors is segregated in a sub-fund of that fund. So we can literally create hundreds, thousands, tens of thousands of sub-funds, one for each property.
And you then the platform becomes the ASX for potentially trading those fractionated units.
Like a property exchange, yeah, in effect.
So who typically invests in the DomaCom platform and the sub-funds on it?
Well, as I say, mainly our business is B2B model. Financial advisors bring their clients, so they may be individuals, they could be family offices, they could be self-managed super funds. So almost anybody can invest.
And what kinds of properties are on the platform?
Well, that's a good question. We have a wide range of properties, from residential property, we have rural farmland, we have investments in solar energy, we've done some property in NDIS, disability housing, affordable housing, land banking is another. So a wide range, and it keeps getting wider. There's been discussion around gold, there's been discussion around corporate bonds, to give you a couple of extra examples. We have also developed a home equity release for senior Australians, Australia's first financial product in that space. So commonly, I guess, confused with reverse mortgages, but reverse mortgages are credit products, and there's a home reversion scheme, which is really a real estate product. So what we set about doing was creating a product that financial advisors can use, because they can't necessarily use credit products unless they have a credit license or real estate. So in creating this, we've now enabled financial advisors to expand their client reach into that older age group, which is a fairly sizable demographic in Australia and growing.
Take me through those. So it's not just being able to invest in residential property as an asset class. Can the platform actually be used with the lower investment amounts and entry points, etc.? Can it actually be used to achieve eventual ownership if you're a young investor?
Absolutely. That's simply a process of acquiring all the units. Let's give you an example. At $1 million property, so we issue $1 million $1 units, and you buy $50,000 worth. Using our secondary market over a period of time, you can bid to buy the units from the other investors. And that's a two-way street, because people who need to get out for whatever reason don't have to wait for a term to expiry. They can just sell their units or post their units for sale as you would in the equities market. I mean, our secondary market has market depth screens and buy-sell screens, very, very similar to a ComSec screen.
How does it handle rental?
We, in the process of acquiring a property, DomaCom undertakes or outsources the due diligence process, so formal valuation, and we have rules around valuations. So we do have tolerances there. We won't just pay any price for any property. We organise property inspections, pest inspections, that type of thing, just so that we can ensure as best as possible that this property is good value and it's sound. Part of that process, once we acquire the property, is to put it in the hands of an agent. So we don't manage the properties, and we've got properties in every state of Australia. So we can't possibly manage all of these properties, but we outsource that to a qualified property manager. Their responsibility is to tenant it and collect the rent. The fees come out of the rent, and then the net rental is then paid into the bank accounts of the investors, and that happens every month. Explain
the sub-fund concept to me.
The sub-fund concept is rather than have a pooled structure like an unlisted property trust where you go into a fund that already owns properties and will add properties, and you have no choice around that. The idea of the sub-fund is you have choice. You can choose properties that you want to invest in. Individuals can create their own syndicate. We have a link in with Domain, and every property for sale in Australia that's on the Domain list is on our platform. You can go in there and just search postcodes or types of property, whatever, and you can create your own sub-fund. You can invite people through LinkedIn, Facebook, Twitter to join. You can describe the property and invite people to it. So create your own private syndicate. No one else can see that you've done that. Financial planners do exactly the same thing. So they can create a private sub-fund, a private syndicate among their own clients, or they can create a public one which is visible to everybody. Just by logging in and being a member and logging in, you can see the public sub-funds that are available and you can join. You can put as little as $1,000 in. So the idea of the sub-fund is to segregate the assets, so you're getting precisely what you want. You want investment in residential property in a particular city or a street even, you can have that. You're not getting something that someone else has chosen.
Some paradoxes that are occurring to me in this conversation, Warren. Housing affordability, everybody screams from the rooftops about it. Government's got to do something about it, etc., which is really hard to do in a free market where willing participants transact at whatever the price is. You've built something that gets around that.
Yes.
But having built it, will they come? Are they coming? Do people actually understand it?
Look, they're slowly starting to understand it. It's a different paradigm. It's really tipped, I guess, the real estate industry on its head in that respect, and people will slowly come to realise. One of the big questions, of course, is market depth. How do I sell in the secondary market? Is there a depth of market? Well, just think, if the stock exchange started today, is there market depth? I mean, it's taken a couple of 100 years to get to that. To get to that point. When you think about property is many times larger in Australia. Just residential alone is like 6-7 times bigger than the ASX. So then you've got all of the other types of property as well. So it's a huge potential market. So to getting it through people's minds. But I can remember when we started, and I took this idea. As it was at the time, home, and I was explaining it to my wife, and she said, I don't know if I want to have, co-investors in my home. And I said, well, you have now. Of course, she said, what have you done? And I said, I haven't done anything, but our co-investor is the bank that we bank with. And she said, oh yeah. I said, but that's different. I said, how is it different? How would it be different if it were so-and-so's self-managed super fund down the street, or 20 other people? They're invested in it. We don't know who they are. They don't know who we are. They've just invested in an asset. Isn't it better to own part of a property than no property at all. Now, in some cities, as you know, around the world, there are people who rent their entire lives and never buy. In New York and London, some of these big cities of the world, never own a property. And then in Australia, the great Australian dream is you've got to own your property. Well, there can be a position part way where you part own and part rent, but you have the ability to buy a bit more equity with your savings. You don't need to borrow any money. So if you can't quite reach that 10% deposit or 20% deposit that's required of you, but you can get to 5%, use that. You're in, your foot's on the property ladder. And then even if you could afford to buy your home outright, should you? That's a question. Would you put all your money into one stock on the ASX?
That's right.
No, you wouldn't. You would diversify. So I can afford to buy my whole home. Well, why should I? Yeah. Why don't I buy a bit of a property over there, or a bit of a property over there, a different type of property in different geographic locations? I have a spread. It's called diversification.
That's right. This is something that gets around what a lot of people don't understand or accept, and that is that their house, their property, has the idiosyncratic risk of one asset.
Yes.
And it's the definition of concentration of your exposure in that asset class. So this is actually, and we've dabbled with fractionation in various ways, as you said before, with syndicates and things like that in the commercial and industrial and office retail space, etc. But it appears that this Australia's great love of residential property, blind faith arguably in residential property, but this turns that asset class, brings a kind of a share market concept, as you said, to that asset class.
Yeah, exactly. And why shouldn't it? I mean, it's the only asset class really that hasn't had a sort of technology makeover, if you like. And now we can change that.
So a young investor, as you say, wanting to get onto the property ladder, using this platform, if they're really adept, understand DomaCom very, very well, and can use it to diversify exposures across, because there's not just one residential property market, there's hundreds in Australia, different ones. They could arguably get a better, more higher quality exposure through diversification than somebody with a couple of properties in Melbourne or Sydney.
Yes, absolutely they could. And in a wider range of properties, and they can invest in property in a socially responsible manner. There's an enormous need for affordable housing in Australia. There's an enormous need for disability housing. There's a huge waiting list for people getting into purpose-built disability housing. Australia's farmland. As I said to you, before we started, I saw a program on Landline a couple of years ago where this chap was saying that this particular town, I think it was in the Riverina, but I'm not sure, wouldn't be fielding a football team next year because there's nobody left. They've all left. All the young men have left because there's no work here. I know that there are younger farming families that want to start their own farming enterprise, but they can't pay the multi-million dollars required to buy a farm these days. So, but here we have people in the city who could be diversifying their portfolio, just putting a little bit of money into rural farmland and getting, a 4 to 5% rental yield, or perhaps better, plus the capital growth. And the capital growth across the board has been excellent over the last 20 years in the rural property space. And they're doing something useful and something good. Farmers generally are selling their properties because they just get to a point where they can't continue to work them. For whatever reason. They want to retire. That is their retirement. So who's going to buy them?
Tell us about this move of the platform into the Islamic finance area for housing, because that's something not a lot of people would know about, but the applicability of the platform.
No, look, that's going to launch over the next few weeks, and the interesting thing there is that there are close to 1 million Muslims who live in Australia. They're underrepresented in home ownership. For them, under their religion, borrowing money is not an option, and paying interest, nor is receiving interest an option for them. But if we can fractionalise property, that is a way of providing housing funding for this particular cohort. And again, using the secondary market, they're able to buy out, to buy units off their co-investors, if you like, over time, and achieve home ownership. Instead of paying principal and interest, they're paying rent and buying principal, if you like, buying the capital.
And Warren, of course, there's another way of investing in the DomaCom fractional investment platform, because DomaCom is a listed stock on the ASX.
Correct. We listed DomaCom about 4 years ago, and obviously to raise capital. But I guess the benefit to investors and the benefit to advisors is that they can see the company, the corporate governance. It's fully transparent, as you have to be on the ASX. So we see that as a plus.
Warren Gibson, thanks for your time.
Thank you very much, James.